advisor at VestGen Wealth Partners. All right, Craig, great to have you back on. Welcome to a Friday.
Hey, good morning. Happy Friday to you. February's turned out to be a little bit of a February when I think about markets, but I think we're hanging in there.
Well, I'm glad you're starting in that direction because I really want to start over on the equity side for a moment. And when I look at what's happened on the Dow, NASDAQ, and S&P, we're lower for the week, we're lower for the month, and with the exception of the Dow, we're in the red. Dow, S&P futures higher this morning, NASDAQ a little lower. NVIDIA, is that playing a role?
Well, I think at the end of the day, what we've seen is we've just had a growth scare, right? That's all that's happened. I mean, you start with the University of Michigan sentiment numbers. You pile on with Walmart warning about having to put price hikes down to their end consumers, all of us, shoppers, on electronics and other things based on the tariffs that could go effect on March 4th. And then you follow that up with some bad data relative to how people feel, again, sentiment with the Conference Board Index. And I think it just means the market's tired. And when the market gets tired, the money's going to flow out of those areas that have seen the most flows. No one's going to be upset about NVIDIA growing their earnings 78% quarter over quarter, year over year. That's great growth. It just means that the highest growth stocks are on pause as we see markets rotating to things that have more value, aka they're cheaper.
All right. We already know from like Warren Buffett, a record amount of cash that he's built up. And it just gets me kind of thinking about the amount of money that's moving around. But what about market cap dipping below $3 trillion for the first time since the company reached the milestone back in June? Again, on that NVIDIA, 8.5% loss.
Well, yeah, that's a huge noteworthy number, but I first want to mention something on Warren Buffett really quick. I've talked on this program before that, yes, he did hoard some $320 billion of cash, but we learned as recently as Tuesday and Wednesday of this week that he's about to start deploying that cash into not one, not two, but 5 Japanese stocks. So Warren Buffett is not uninvesting. He's just redirecting his investments. What you just said is, again, anytime the stock market literally loses $1 trillion in a single day, aka not that long ago when DeepSeek, which I think was really deep fake, the Chinese AI chatbot that went ahead and competed against NVIDIA and the rest came out, I think it just shows that there's vulnerability anytime anyone's investing in the area of innovation that leads to disruption.
All right, speaking of disruption, let's talk tariff plans. What are your thoughts?
Well, you know what? I feel like it's not much ado about nothing, that's for sure. But there was Trump 1.0. We're on Donald Trump 2.0. And if I jump back into my investment time machine, I've only got to go back to 2019. It's 6 years ago, where in 2019, we had 7 significant pivot points on trade in just 7 months, meaning goalposts got moved 7 consecutive times. And I wouldn't be surprised if we see some of the goalposts move in advance of March 4th or move soon thereafter March 4th, because these are very significant, larger policies. Clearly the market belief with the futures all in green this morning, S&P, Dow, and NASDAQ, after we just got the inflation data coming in at expectations, the futures clearly believe there's a lot more negotiation than actual policy implementation that's here. So I'll be like the rest of America. Let's wait and see on this.
All right, you kind of alluded to it, so let's just go ahead and go through that door. PCE numbers out today. We get core PCE. I'm trying to get back over to my numbers here. The PCE price index, and it's in line, isn't it?
Yeah, it's completely in line. 2.6% year over year is in line with what we wanted. Some people are going to be happy because that January income came in higher for workers at 0.9% versus what we anticipated only being 0.4%. And if someone wants to continue to see U.S. consumer exceptionalism, having some rise in personal income is
all right, Craig.
everybody knows the retail sales were soft in January.
Yeah, I didn't mean to cut you off there. Just before we let you go, we have got to get the website and how we can find Craig online. Where do we go?
Listen, love being on your show. I want people to connect with me on getretiredstayretired.com. That's getretiredstayretired.com. Craig Bolanos, VestGen Wealth Partners.
Yeah, Craig, thanks for doing this, and happy Friday. All right, coming up, we've got your calls at 855-776-6147, 855